Folks, and welcome to the lake edition of the Sunday Report. Currently down at Lake of the Ozarks, hanging out in a kayak. I thought this would be fun. I don't have all my audio equipment with me, so hopefully the audio on this isn't too bad, and won't be any fancy editing because we're going to do this in one take, so hopefully we don't go on too many tangents. We did some technical analysis last week. I still think that needs to play out in this market. I still think it could. This is kind of the market environment where you want to have some stop losses set though. For sure, because with the fake outs we've seen, and the big thing here with what you want to watch with those fake outs is watch the VIX volatility. Or I know Bank of America has their own volatility package. It's called Move or something. I've heard lots of people suggest to track that. I haven't really dug into it yet, but when you see this volatility true of the market, let's say the S&P is moving up and volatility is moving up with it, those are really rare occurrences. And when we see that, it's almost like 9 times out of 10 you're going to get some big fake out. Or when the market was melting down and volatility was melting down, you got that big fake out to the upside. That was like the Thursday or Friday opens where you saw these huge swings where all the movement that you really wanted was kind of in the pre-market. And then this market is still heavily trending with this options trading, where you're seeing like on Friday when there's a bunch of calls and puts, the market ends up just going trading sideways because it doesn't want to print those massive amounts of contracts. There's something like, you have 500,000 calls and 500,000 puts. Market makers don't want to print all those out. The market's going to trend sideways, and a lot of that is because of the hedging, the delta hedging that they do against those option contracts. Remember, your delta on the options contract is the value that the contract will change in proportion to the underlying price action of the stock. So if the stock goes up $1, your delta tells you how much increase you're going to get on that contract premium. Just in case you're a little confused on that verbiage there. Of course, check out the Discord because I have described all that in there as well. So this market is definitely trending with these this high option volume right now. Everything's really bearish right now. When I'm looking at opportunities, I keep looking at USO, and I keep kind of kicking myself because I'm not in a USO position right now. In fact, I've sold personally into this rally. And when we got those small rallies, I've also been kind of unloading some tech, small, but been doing some of that. When we had that 10% day this past week on uranium, I also took some profits off on the uranium. Because, we got 10% in one day on CECJ and UUUU and UEC, which is the American Uranium Company. And then, of course, next day we saw some big pullbacks there. I actually took that as an opportunity to set up some calls. But the big thing that I want to focus on and want to talk about is crude oil. U.S. oil, I think we're going to be pushing to a new high. And the thing here is that you don't want to get blown out by a fake out, right? It's really hard when you're looking at these things and you're saying, okay, we're near an all-time high. What would cause us to actually push to a new high? And oil in particular, all the contracts are different. Trying to figure out how much we actually have in reserves, trying to figure out, okay, what are the ESG guidelines? What's going to change in the future? For as far as ESG guidelines go, they're going to restrict how much carbon pollution ships should put out in the future. We've talked a lot about in the past. And, to do that for a big diesel ship, all you can do is just drive slower. And that's just an example of lots of the instances where we're trying to lower our carbon output. But everything to get to there, to push it, the technology hasn't really caught up for us to do that in a very practical way, which is one, why I like uranium so much. But two, is going to continue to put more pressures on different industries. Now, as far as ships goes, that's going to affect supply chains more. And I'm kind of derailing myself. I want to get back to the oil conversation. When you're trading it and looking at ESG, you're looking at for pressures that will push the price up. And when I'm thinking about that, I'm thinking about Russia. And so one of the things that I learned Friday actually was that back when the Soviet Union fell apart, okay, you had that collapse. That was another situation where they had to turn off the crude oil. And the way that engineering works with these is that once that's turned off, it's extremely difficult to turn it back on. It's not a simple process. It's not a flip of a switch. So when you turn off that oil, in the past, when they turned off that oil, they needed Western engineers to help them turn it all back on. And the reason that they're probably going to have to turn it off in a few weeks is because of all the backup supply. Okay, people are saying we're not going to trade with you, and they get some buyers. We heard that India was probably going to start buying from them because it was cheap to buy from them because no one else was, and they had this big supply that was continuing to build because these are just a natural flow that doesn't stop. So as that supply continued to build, the prices got really cheap, and we heard that Turkey and India and I think China as well were using this as an opportunity to buy some really cheap oil. I think even some U.S. companies were saying that they were going to do that and then take the profits, donate them. They're trying to, take the opportunity to take some oil off the table and then donate the money to charity so that people wouldn't come after them as being like evil, So the big thing there is that once those are turned off, though, it's going to be really difficult to turn that off, and that supply will stay off. So you're permanently removing massive portions of oil supply from the industry. Once that's gone, it's gone. Okay, so that when you are looking for what would push those prices to all-time highs, and we're trying to dodge that pullback, because remember, when these pull back from their highs, it could be violent pullbacks. Okay, these down days are quick down days, right? I put out a video recently where I was saying, hey, people might try to time this upside move because we were talking about, okay, this market could push to 420, but then we're looking at 440. But these downside moves are aggressive and they're quick, especially when you have these negative headlines hitting. But when it comes to the energy trade and you're trying to dodge that quick downside, you want to have those catalysts. And what I'm thinking that catalyst could be is Russia shutting down the crude. So I think that could be a really interesting trade and opportunity as well. The other things that I'm kind of looking for in the summer is there's also going to be the natural more need for us to utilize different gasoline. People are going to travel. I don't think inflation has hit the point that people will stop traveling yet, so there's going to be a natural higher demand. Now these pressures though could easily send gas prices to an average of $5 or $6. $6 is no longer like a ridiculous claim, and I've heard some people make that claim. It's kind of hard to argue with it. So with all that considered, I think USO could be bound for $100, which means we got $11 upside there. And I'm thinking more of like a credit spread to try and kind of scalp that on the upside. And that's just one trade. I think there's a few really good trades to take right now. Another thing that's kind of caught my eye in this market environment is that biotechnology has been really strong. And that's been really interesting. As far as catalysts there, those are more detailed than I really want to go over. We're already pushing 7 minutes, and I'm going to make this kind of short and just kind of talk about energy as a whole. But biotechnology is really exciting. Lots of great innovations there. And Cathie Woods has also talked about this a lot, about how deflationary those innovations could become for the healthcare sector, which is great because we really do want more competition there. Better healthcare for everyone. Better solutions, cheaper solutions, and a more wide sweeping. So I like that a lot, to see that strength in that sector. And even though even on the down days, we saw CRISPR having some great movement in it. Although it's not the only one, IBB is going to be your big ETF to watch there. I currently hold Leaps in that. I think I bought them a little bit early, but timing bottoms in a sector I'm so bullish on, it's just I'm not so worried anymore about timing perfect tops and bottoms because it's so hard, right? Even if you're using like Elliott waves, you're getting your Fibonacci levels, you're trying to get those perfectly. AA is a stock where I tried to get the bottom on, and we kind of worked with one of the hedge fund that we recently partnered with to kind of do some technical analysis on that and try and get entry there. This is just one example. There's a few stocks that we've been having our eyes on. I think the banking stocks are pretty interesting right now. I did notice that TLT's kind of had some bullish movement in it. It looks like that 112, I don't have it right in front of me, so I'm going off memory. I think the 112 was that bottom that came in right there. But the big thing that I'm thinking about with TLT is that we're seeing lots of bearish bets on the futures contracts there, like larger than we've seen in a while. And I think that could be kind of worrisome for my analysis, where I want to see this turn, right? And I guess actually before, let's derail for a moment and kind of talk about what would cause the turn there. And one of those would be the Fed breaking the market or the Fed turning their analysis. Now, I'm not in the camp that the Fed is about to pivot. And I think that could be what's giving this market its bullish energy. Now, another thing that could, which would be probably what could push this market to like 440, let's say. That'd be the catalyst you'd look for there. The catalyst for 420 could easily be like the Amazon split. I don't know what I just said. The Amazon split. Or remember, Shopify has a split later this month. And you know, you could start to, you know, these compounding different things in the technology sector, and the fact that it's so oversold could make investors start to allocate to this sector, even though we kind of think that I think in the long term that we're going to see some more downsides. You know, I'm looking for 350 previous COVID highs to come around in this market. But those splits, you know, Amazon especially, could easily send some bullishness into this market, and I think push us to that 420. And of course, we're going to need to watch those option contracts, see how that goes. Market's not wanting to print them. A lot of this movement's coming in the pre-market. And so make sure you watch the volatility indexes, because those have been killer trades playing into the close. If you're watching the volatility index, like, wow, SPY's melting down with the VIX, I guess I'll go for, you know, a small call play into the open tomorrow. Then boom, you know, we shoot up $4, and you're talking about, you know, 200-300% right at the open. You just sell it right away, take the profits. It continues to melt up. It's fine, you can chase it, but you don't even really need to. You pretty much made your money there, right? So that's a great, you know, you just take your risk off at the open, because you know, there's a lot of people who are like, well, I'm going to hold it, I want more. It's like, you're up 200-300%, just take your profits. You know, you can take a portion of those profits, take 60% of those profits, use it in your next play. It's just nonsensical to continue to hold that past that, right? Which is something that I see lots of new traders do, and I'm always like, why? You have to think logically, not emotionally, right? Why would you hold something up 200-300% when you could just buy another contract with 60% of your profits, just your profits, and then take all that risk off? It still makes some money. It just makes no sense why you wouldn't do that at that point. But you know, people get, you know, emotional, and they just want to keep holding it, even though it doesn't make any sense. So that's what I'm thinking about. Sorry, I'm kind of derailing myself, trying to make sure I didn't miss anything that we're talking about. So TLT. I'm in the camp that the Fed won't pivot. Why? Because the job numbers have been good. The economy is showing some signs of being bad, but they keep coming out saying it's doing great. We had Biden come out earlier this week, and he was saying the economy's strong, and we're going to give the Fed the space to do what they need to do. And what the Fed wants to do is bring down inflation. And for the Fed to bring down inflation, they're going to crush this market. They are your enemy right now, and you don't want to fight the Fed. That said, is there potential for this market to melt up a little bit? Yes. Is there potential that bonds could come down more because the Fed's able to get a few more hikes off because the market's been a little bit more sturdy than people expect? Yeah, there's potential for that. But if I have contracts out to September on TLT, and for some reason there's a market crash before then, let's say second quarter is super bad, surprisingly bad, because we've kind of gotten hints of a little bit more strength in some sectors, and then other sectors been, holy cow, you know, hellfire. And then second quarter comes and you say, whoa, this is more broad sweeping than we thought to the downside, and this market's going to melt down. TLT will spike like that. If this market takes a sudden drop, that people will flood back into those bonds, and I think that safety will come back in play. And you know, you also got to remember how rare it is that bonds do this poorly when the market's also doing this poorly. And by the way, I hope that noise isn't too bad. I might want to kind of drift myself around a little bit. But anyways, we're about 13 minutes in. Enjoying the lake this week. I will be in the Discord this week on occasion, on a few times. What am I saying? I will be in the Discord this week, not just on occasion or a few times. I'll be watching the market. You know, if we make a few good trades in the morning, I'll probably enjoy myself and go for a swim or something like that. We're going to be here for the week. But that's what the plan is. I hope you're all doing well. This has been your lake edition of the Sunday Report. I think I got everything out that I wanted to get out for the most part. There's some new stuff, so maybe I'll make some more videos about that. Make sure to check out TikTok, where I'm more talking about the news and stuff. We got a few more of those coming out. I was going to talk about the energy stuff on there in more detail. I think I had a clip I have on the computer that I made where if one of the oil experts talking about that. So that might be really, you might enjoy that. I do lots of clips on there. I feel like it helps with just the validity of the information. Kind of like if I'm a reporter, I would provide my source, right? I'm not the know-all, be-all about all these things. I'm just constantly doing research 24/7. And then I try to share that with you in little quick clips. So I hope you found this helpful. I hope you're doing well. There's still lots of money to be made in this market. And remember, when everyone's doomsday and stuff, just remember things do improve over time. And some people bearish on America right now. Not me. Not even a split second. If you're wondering why you think China's going to take over, make sure you check out the last Sunday report. We talked about that. And I will see, or I'll talk to your beautiful faces in the Discord. Let me know what you think in the comments down below. And I hope the audio doesn't suck for this because it's going straight to YouTube. I'll see you in the Discord.